U.S. stocks closed mixed on Friday. The Dow Jones Industrial Average rose 48.95 points, or 0.10%, to 49,593. The S&P 500 gained 3.41 points, or 0.05%, to 6,836.17. The Nasdaq Composite fell 50.48 points, or 0.22%, to 22,546.67. U.S. January CPI rose 2.4% year over year, below the expected 2.5%, with core CPI at 2.5%, the lowest since March 2021. The tame inflation data initially boosted stocks, but tech selling pressure persisted, with the Nasdaq posting its fourth straight daily decline and fifth consecutive weekly loss. Big tech mostly declined. Apple fell over 2%, Google A lost 1.06%, Google C dropped 1.08%, Meta declined 1.55%, Nvidia fell 2.21%, Broadcom dropped 1.81%, Amazon lost 0.41%, and Microsoft dipped 0.13%. Tesla edged up 0.09%, while Netflix rose over 1%. Chip equipment stocks shined, with Applied Materials soaring over 8% to an all-time high on better-than-expected Q1 results and guidance, with Morgan Stanley raising its price target from $364 to $420. ARM and ON Semiconductor gained over 2%, while Qualcomm and Texas Instruments rose over 1%. Memory chip stocks paired early losses, with Seagate, Western Digital, SanDisk, and Micron each closing down less than 1.5%. Rivian surged over 26% on projected 2026 delivery growth of 47% to 59%. Pinterest plummeted nearly 17% on weaker-than-expected Q4 revenue and soft Q1 2026 EBITDA guidance. DraftKings fell over 13% on disappointing full-year revenue outlook. Chinese ADRs were mixed, with the Nasdaq Golden Dragon Index down 0.10%. Zai Lab surged over 6%, Tencent Music rose over 4%, Huya and Yum China gained over 3%, and NetEase added over 2%. Decliners included Jinko Solar, Canadian Solar, New Oriental, and Kingsoft Cloud, each down over 2%, while Alibaba, Li Auto, JD.com, and iQIYI fell over 1%. Taiwan Semiconductor lost 0.47%, Pinduoduo rose 0.06%, Baidu fell 0.99%, Trip.com dipped 0.06%, Futu Holdings lost 0.52%, Tencent Holdings ADR gained 1.35%, ASE Technology fell 0.26%, and NEO was flat. Following the January CPI data, traders increased bets on more than 2 Fed rate cuts in 2026. The CPI report showed headline inflation falling to 2.4% and core inflation to 2.5%, both below expectations. The 2-year Treasury yield fell to 3.41%, its lowest since September 2022, while the 10-year yield dropped to 4.05%. The U.S. dollar index was little changed at 96.84. Fed officials indicated monetary policy is in a good place, with New York Fed President Williams stating the current policy stance is appropriate. Markets now expect the Fed may begin cutting rates in June, with total cuts potentially reaching 2.5 times this year. For next week, key focus areas include Monday's President's Day holiday when U.S. markets are closed. Tuesday brings January retail sales and February NY Fed manufacturing data. Wednesday features PPI producer prices and January industrial production. Several Fed officials are scheduled to speak. Technically, the Dow is holding 40,900. The S&P 500 is finding support near 6,800, while the Nasdaq's fifth straight weekly decline shows tech stocks remain under pressure. AI replacement fears have eased somewhat, but investors remain cautious. Defensive positioning is advised, with attention on the final phase of earnings season.